Good morning, everyone. This is John, and welcome for our second installment of our trading course class. We have started the recording, so this is live. In your announcement section, a little tab there should have the recording link for Thursday night's presentation, and it's 10:04. So I just wanted to make sure that we could get our recording up. We got our sound checks out of the way. So thank you all very much. Malcolm, good to see you, sir. And yes, we did have a great, that was a pretty good breakfast, so it's all good. It was great to have you in New York City. But I do understand that a lot of you guys have choices to make today, where to be. Some of you will prefer to stay home because of the snowstorms that are coming in the middle area. So with that said, just wanted to make sure everyone got what they needed this morning and everything's out of the way. Okay, so basically what we first thing we're going to start with is our risk disclosure, and obviously there is take a second to read this through. And this information is educational information. I am still a registered CTA with the National Futures Association. In the past, I've been a registered Series 3, a 30, et cetera, et cetera. I am actually studying for my 65. Many of you that were here the other night did see that, and I know there are some newbies, new folks here, so welcome this morning. If you've heard of me but not really familiar with what I've done in the past, I've been around since well, my first start on the floor of the Merck in 1977. George Lane was my mentor. I worked for him back in 1980 through 82. George developed the indicator called stochastics, so I learned a lot from him and others. I began trading options in 1984 when they were first introduced on Treasury bonds. So if there was an option strategy, deltas, looking at theta, all kinds of plays, we had some of the best education on the planet back in those days. First Options was a clearing firm that trained people. We had our sheets on theos and theoretical values. If the market is here, what should we be at? Dot, dot, dot. So what was important for me was to look, since I was a commodity trader, many of our moves were directional in nature. A lot of my options background and my option strategies are mostly directional trading. So you'll never really hear me sit there, and even if I think a market's not moving, I look for a directional trend move. It's just been my style. I know there's was some chatter the other day about iron condors, and iron condors are, I guess, good if you are in an area of a market that's stalling, or if you can predict. The best time is to predict when a market's going to go into a consolidation mode. But then typically when it's already in a consolidation mode, I always found, you know, the IVs were kind of low and there were better opportunities elsewhere. And that's what I do. I like to look for, and that's what I specialize in, looking for opportunities. So with that said, a lot of you are familiar with my work and my books and some of my indicators, and I know we have some new people here. I want to welcome you all from TradeStation. I promised I would talk about Persons Pivots in today's session, as well as sector analysis, and find out towards the end of the month, which was yesterday, what the market indicators look like moving forward, and where is the next maybe wave or push or perhaps sector rotation of what we see in the marketplace. I'm actively trading. We run a trading room. We have a live trading group here every day. I'm the creator of a program called Trading Triggers. It's an online educational trading program, as well as we mix that with our members in our live trading room. So with that said, many of you know that the Stock Traders Almanac, the oldest public financial publication, dedicated the 47th issue to me this year. I was very it's probably the pinnacle of my career. I mean, it really is. It is something to be acknowledged by such an outstanding publication. So with that said, what we're looking to do here is to help you achieve success and successful trading skills. And I think Thursday night we talked, and I'll take a quick review about why people struggle with volume, on-balance volume. We had some people that were talking about why certain sectors weren't confirming a market, and I think we dispelled to some of you that were not here, you can look at the replay. What we saw was that we do have a tendency in March to see a major sector rotational grind. And March is a very interesting month because we all heard the term, beware of the Ides of March. After St. Patrick's Day, we start to tend to see volatility increase, which means we start to see some market segments start to decrease. And so that volatility increase is due to gyrations and market downturns. And so with that said, I think March is an important turning point. We talked the other night about a potential 1 to 2% move in the S&Ps to the upside, and where would it take the market? I think many of you were here for that. All right, and what we want to make mention is the fact that the whole thing about looking for market opportunities is the fact that, you know, we hear so much, we see so much, and it's hard when you start to get confused in the marketplace and things don't kind of jive. You know, for example, gold moving up, stocks moving up, bonds moving up. And a lot of us are prone to looking at these intermarket relationships. So with that said, I think we do have, I'm going to stop the projector at this point because we are not moving, the title screen is not moving, so bear with me a minute. Okay, so there we have it. Through the month of for first of the year, one of the things that we talked also about, a lot of people said, and someone made a comment the other night and posted in here that they had picking stocks was like picking a zebra stripe and a pack of zebras. I thought that was such a great line, and in other words, it sounds like they were having an extreme difficulty last year. And for us, we pick stocks, and I think one of the things that we see is, if I may, there we go. Yes. Okay. So there we go. All right. So the moral of the story is what we want to say is simply this. I think there is a rhyme or reason of what we're seeing in the marketplace. We talked the other night about utility sector. We talked about energy sector. It's just been kind of like a checklist. And then we talked about the banking sector. In fact, last year, my partner, Tom Asprey, who is a very famous technician who actually created the MACD histogram component. Many of you use MACD. Well, that histogram component, he invented that part for Jerry Appel. Tom's very, you may see many of his technical articles. He writes for The Money Show. He's an avid technician, just an all-around outstanding individual, human being, and I guess, you know, we jived very well together, our personalities as well as our technical styles. And last year, our advisory service with PA Stock Alerts was up over 100% in 2013. And I was not afraid to share with our live track record what we've done this year. Now, this is not this is actual stock trading. This is not using options to it, and we have a lot of cheaters here, and I call them cheaters for lack of better words, but we have a lot of people here who have used, in fact, optionable strategies rather than buying the underlying stock and have done incredibly well. And if you notice here, Gap, Netgear, Kimco, which is a property management group, Exelon, XOP, Exelon, which happens to be a utility stock, XOP. This was a stock that I liked, C.H. Robinson Transportation, because it had gotten so beaten up in 2013. It was due for a pop, and we thought we would see a little pop. We did. We got out right before earnings. Potomac is another utility company. PC&G is another utility company. I mean, these were substantial moves. And if you notice the sectors that I'm looking at, Netgear, kind of Netgear, a little bit of technology, not much real estate, looking at utilities, looking at XOP, the energy space, oil and natural gas. We got into that before the big surge that everyone was looking for. Look at the dates of entries. This is in the 17th of January. So look at when we got into utilities in the beginning of February, not the end of February. We actually started taking profits when people started to talk about how popular and how great the utilities were. So it looks, as you can see here, we're getting into stocks that are some of the strongest names in their sectors, in sectors that perform very well. FCX. And then notice that towards the last week, we even provided you, we were, since the beginning of February, we're in Pulte Home Group. We saw a move coming in the home builders like Pulte, Lennar. We just found that Pulte had a better risk outlook than Lennar. And so far, as of Friday's close, we're up 8% on that. Bank New York Mellon, which is more money management, we just got into this trade the other day. BB&T, we just got into this trade the other day. And Joy Global, we're just taking an 8-cent hit on that one. It was up $1 for us Thursday, and it came back down, and we're trying to establish more of a position because Joy in the material sector. And then look at this one, the KRE. Now, you guys know we kind of talked about the KRE a little bit, and the KRE, which is really amazing because that ETF, that sector is for regional banks. I mean, a 2% move from in just 2 days. Now that's a pretty sizable move for a stock. Can you imagine if you applied option strategy? So we do seem to have the ability to pick certain stocks that have good risk. Now I'm sure there's a lot of stocks that have done better, and there's a lot of stocks that have done worse. But that's one of the things that I think is very important. So with that said, whether you're looking at stocks, whether you're looking at ETFs, whether you're looking at the overall market, I think that's very important. And I wanted to share with you, what did the market look like from the end of month perspective? And that's what we're going to go in through right now. Okay. So for those, someone just said that they never traded stocks and never will, and they'll see me later, and that's fine. And quite frankly, that's, you know, for those folks that are not interested in what we're going to be talking about today is the overall market segments. Number one, we're going to be talking about certain changes in the markets and what sectors, and when I talk about sectors, I'm not talking about overall commodities like corn and soybeans and coffee and cocoa. So if you guys want to look at something else, I'm just telling you what we have to offer today, and it's just exactly what we talked about in the thing. So if it's something that you're not interested in, just log off. You don't need to post it. That's fine. What I definitely wanted to say is, what did we see in the markets? This is again the S&Ps. This is the top 5 stock indices, and this is my Genesis package. This is a daily basis, and this is a weekly basis. And as you can see, I want to look at the weekly basis, and I also want to look at the monthly. And I want you guys to maybe see what we see: an uptick in volume. We saw a nice move with the advanced decline in the overall market. We had this little doji on a weekly basis, which means a stall, and we had a strong commitment that anyone that was nervous about the market here on that weekly doji that the S&Ps formed 2 weeks ago, well, they reaffirmed that they've turned more to the bullish side. And I understand Friday was pretty wild in the afternoon based on the news with Russia, and there's a lot of different opinions in the market. We talked about the potential for, if we broke out of here the other day, that where would the market be on a percentage move to the upside? And if we get a 2% move from where we were, a 2% move is roughly around 1880. Now, what is it going to take for the S&Ps to move? It's going to take more buying, and it's going to take maybe some sector rotation, and that's what I see. Now, that's the S&Ps on a weekly basis. It looks pretty strong. What about the NASDAQ? Well, the NASDAQ looks pretty strong all the way around. This is the NASDAQ 100. And the NASDAQ 100 looks pretty strong from both a volume commitment with on-balance volume as well as the advanced decline on a weekly basis. So it doesn't look technically weak still. And the Russell, let's take a look quick together with the Russell. The Russell lagged with volume, and we saw finally a new closing weekly, not daily, but weekly. We have a new weekly closing high. So momentum traders, people like the turtle traders or anyone that looks for new highs and new breakout highs, typically a market, that's not to say that we might not grind and try to, I think professional traders will be buying breaks until the breaks don't work anymore. And that was our comment the other night, that the market is still bullish until the bullish trends cease to exist. Looking at the NYSE, we had a strong commitment of a breakout in the advanced decline. Now, this is not a daily chart. These are weekly charts, friends. So to me, it's like, I don't know what experts are on the TV talking about. Maybe the market's due for a correction, and you know what? I agree. Eventually, the market will correct. But the funny thing is typically technical analysis will give us an idea of that market turning. Typically, it's just being able to read the market. Now, if you look at the NYSE, boy, that's a pretty strong commitment. If you take a look at the old highest peak in volume, we just poked our head above it. So we have a new high with the advanced decline in the NYSE, a very strong reading on a weekly basis. Generally, this and a pop in volume precedes price. So it tells us that we should see a follow-through strength in most segments of the market. Now, the last but not least I wanted to share with you is the Dow. And the Dow did finally break out and make a new high. There's only 30 stocks in here, but we did not make a new high in price yet. Volume did pick its head up, so it's kind of like an interesting analogy, and here's my analysis. When people are aggressively bullish at the market, they tend not to go with high dividend yielding stocks. They tend to go with growth stocks and technology stocks. Growth stocks would be considered more of the small cap to mid cap sector, and the mid cap sector also broke out and made new highs. So I'm here to present facts to you guys. I'm here to present to you some technical analysis tools that are unique to each respective market that we look at. And then from a seasonal aspect, we can say, okay, what's going to make the market change? So if you want to start thinking and saying, all right, is it possible for the market to go higher? How can I profit from this? Do I do it in stocks? Can I do it in ETFs? Where should I be putting my money? If the market was so strong, how can it continue to go higher? Is there any more money left into the game? And that's a darn good question, because I can tell you, I keep using this term, sector rotation. And one of the things that I would like to point out to you, this is the Interactive Internet Index. They've changed this, though, all right? But typically, I want you to notice that we tend to start to see a market sell-off in some of these high-tech names that last going into about the second to third week of March. So your Amazons, your some of your more you've already started to see your less your Akamai Technologies, for example, your EMC, and so let's take a look at some of those names real quick. And as you can see, they've acted strong, but they haven't made aggressive moves over the last 2 weeks. And this is Akamai Technology. And if you take a look at EMC, take a look at Microsoft. I mean, EMC has not had a breakout. It's in that space, by the way. ORCL, Oracle, Intel. Oracle just started to break out. Intel, INTC. So you start to see some names. It's kind of a hodgepodge. Some of the semiconductors, the SMH you could look at. And I'm just sharing with you what's causing the market to not make an aggressive higher move. This is the SMH, the Internet, the semiconductor ETF. If you take a look at this, man, I don't care who you are, this volume chart on a daily basis. The other night we talked about how volume can kind of confuse people. The on-balance volume indicator is not that confusing. It's showing a rise in the price. We're seeing the market move. It's not aggressively moving higher yet. So we could see that there's been kind of a mixed reaction with the seasonals. They're acting strong in a seasonally weak period of time. Can you imagine what happens to the rest of the sector when we enter a seasonally strong period of time? The other night, a gentleman mentioned, well, what about the transportations, the IYT, as we kind of look at the IYT. And now, if you take a look with me together, and this is using our TradeStation analysis here, what I'd like to share with you is, boy, this to me, as a technician, we're starting to see on a week-to-week basis, price has not moved yet. But by the way, we talked that we start to enter a seasonally strong period of time for the transportation sector. Look at the market since for the last 5 weeks, 1, 2, 3, 4, 5, 6 weeks. We had a big sell-off here. We had a person's PPS sell indicator. The market did go down, but it didn't go anywhere to the downside. And when it did fall, we didn't see a major decline in volume. We had a mild rally from price close from 1 week to the next, but look at the volume surge that we saw with the weekly on-balance volume indicator. And we talked about 2 companies. One was FDX. Remember this? We talked about FedEx, and then we talked about UPS. And we both saw that they had very similar chart patterns in the fact that they had declined from their highs, they've kind of consolidated, and they haven't moved aggressively yet. But look at this green line, all right? This green line is the monthly support. They've held their monthly supports. So what I propose to people is, boy, what would happen if we get the weak sectors start to gain strength? What happens if we get the seasonal elements of stocks that people have forgotten about, like some of these transportation names, and what if they come back to life and start to get bid up? What would that add to the overall stock indices gains? There might be that sector rotational change in the market. And that's what we see happening right now. And I want everyone to understand we have a gyration between healthcare. So you're going to start to see some of the healthcare stocks start to lessen. You're going to start because they've been very strong, and your biotech's been very strong, and that's that seasonal tendency. So I think if you've been listening and seeing that some of the agricultural names, we just saw John Deere explode yesterday. We just saw some of these names, that we start to enter a seasonally strong period of time. So I think there is a rhyme or reason for a checklist and a sector rotational grind. And if we can teach you guys, that this is an important element in the markets right now, it may help give some clarity to what's happening. We talked about the seasonal strength in bond prices, and we have seen a market rise that lasts through the first week of March. So there has been a rise and there has been an association with a lot of stocks and a lot of sectors that have been adhering to these seasonally strong periods of time. Now, I told you what indicators I use, seasonal analysis. It helps me anticipate a market turn. So I look at seasonal analysis and say, all right, if we are entering, and this is since it's the end of February and we're getting into March, you can't look back and say, gee, these stocks are all bad and this sector's bad and this market's too strong. What we need to say is, boy, what typically does change as we get into March? What does typically change? What does March represent? Well, besides Fat Tuesday, besides consumer demand changes, mid-March you get a lot of people on winter breaks. You get a lot of people that travel. You get a lot of changes in the marketplace. You got, at the very least, a financial quarter ends. So you have an end of quarter. So a lot of people will be preparing for that. And I think just if you think of the changes that occur in your personal life, believe me, they change on a macro scale as well. And that's why it's important to look at specific indicators to say, gee, are we seeing truth in the seasonal tendencies of these sectors? And what we look to is some of these health and breadth indexes that I've shared with you over the last 2 days. Obviously, you got to look at moving averages, but I use a different set of moving averages. I don't use moving averages based on the close. It doesn't mean that I've never looked at them before, and a lot of people want to know, hey, is that exponential? Is it weighted? Is it simple? And I think if you can just imagine what you're using a moving average for, you want a moving average to see what all it is giving you a trend of price based on X period of time. That's what a moving average is. And so if you're looking for what the 200-day moving average is, I love that one because that's what a lot of analysts look at, the 200-day moving average, the 10-day moving average, the 50-day moving average, the 20-day moving average, and that's great. I think there are better indicators out there as well, and there's better moving average settings. If you want to know if a market's bullish, is it breaking out of a moving average of the high? If the market's bearish, is it breaking down below a moving average of the low? And we call those moving average channels. Those are older than dirt. We take moving averages, what I use and what I based my analysis on for decades, and taught many people, and a lot of new educators, a lot of traders have migrated to using moving average based on the high, low, close divided by 3, which is the pivot point. I was the founder, the pioneer of pivot point moving average settings. So with that said, I think for me, if you look at the relationship for you engineers out there and mathematicians, if you have 3 values, a high, a low, and a close, if the close is closer to the high, you have 2 numbers on average that are greater than the 1 number, and therefore you'll get a better read of what the true mean price is. And so moving averages are very important in my studies that I use. And based on those moving averages, I created a moving average component of pivot points, which helps filter out the market conditions. And we're going to get into that this morning real quick. And then last but not least, momentum. And that's a very important slide right there, because look at the closing price compared to past price action. So let's talk, what does past price action mean? Past price action mean what's the past high, what's the past low, what's the past open, what's the past close. And if you close greater than a prior high, doesn't that include the open, the high, and the lows? So think about what we just saw together on these charts. On a weekly basis, we have closed on every index. If we see this close, we close greater than that high. It means it has completely broken out above the range, the open, and the close. So if it closes above a high, of course, naturally, it has a positive change. But I think it's a stronger indication to see a market close above an old high rather than just close above an old close. Does everyone, let me restate that. I believe it's more important, and you have a positive change, a positive momentum change when the market closes greater than old highs. In fact, I call that and labeled that in my book that was written 10 years ago, 11 now, excuse me, 10 years ago, I think it is still, in the book called, this book right here, Candlestick and Pivot Point Trading Triggers. And I think it's on page 262 of that book, what a last conditional change candle is. And it is so important that it really does define momentum and sustainability of momentum. So let me share with you what I mean by sustaining momentum. So on a daily chart, and some of you are fans of the high close doji. Now this is a monthly pivot. You know, at the beginning of February, we made a high close doji at monthly support. And interestingly enough, if you look at our sheet, you notice that we weren't selling stock. We weren't buying inverse ETFs. We weren't bearish the market. We actually started to get long certain segments. We felt if the market went up, then there were certain segments that would outperform the market. And I'm sure a lot of people, you know, may have had doubts about that. But look with me together. If this close is greater than that high, we have a change in momentum. It's a positive change. And actually, as you take a look here, once we saw that change in momentum, the market saw an advance. And we got a little bit of spookiness here because we kept trying to test this old high up in here, but boy, we had one down day and it completely reversed and negated. It formed what we call the equal and opposite pattern. which means there is no negativity. In fact, you'll notice that we didn't even generate a sell signal in here. There wasn't enough technical damage. And so with that said, this market still has, even with Friday's price action, it was very interesting. If you were on vacation and didn't see Friday's action, let me just change this to a 15-minute chart for you, because I think a lot of people will be, we went from about the 60 handle to, in a very short order of time, we just fell off the ropes to 45 and we came back. Now this is a 15-minute chart. I think a 5-minute chart may show the velocity change a little bit better. So when you get, and this is the PPS indicator. So when you take a look at the changes, the market's like closing above a prior high, and the market moves higher until those changes occur. The market closed above a high, and the market just kind of stalled. It didn't go down, it stalled until a fresh indicator said, nope, we closed below a prior low, and then the market just sank. And you know, we never did see, it just kept making closes lower. Now this would be a last conditional change candle. If you notice here, once the market closed above the high of that bar, once it closed above the high of that bar, we generated a change in trend and the market moved up. So this last conditional change, the closing momentum bar, it's very important. It closed below this low. If the market's going to remain negative, then the high of this bar should not be taken out. And when that bar is taken out, it identifies typically a new trend change direction. That's what we call the last conditional change candle. This is a very important observation in my years of technical work, and that's why we wrote about that. And it's a great indicator in of itself, that one particular candle. I think it was most often the most overlooked of all the work and the research that I've done in the field. But to me, I think that that's why when I come into the slide and I say momentum, closing prices compared to past price action is very vital. When you have a one single candle, now if you're a day trader trading E-mini S&Ps, if you're looking at any market segment, a stock, if you're trading ETFs, this momentum concept is very important. And you will probably get certain ideas of confirmation, and that's what you need is the market. Because I think as traders, even myself, you know, people, when someone asks me a question, but John, what do you think about this? And John, are you looking at that? And I'm bullish the market, and they present to me a bearish idea. I'm like, I start to create self-doubt. I do. I'm a human being. We all are creatures of habits. Most of the habits that human beings possess are bad habits. I'm sure you all will agree. I'm a chocoholic. I just can't eat one Reese's Pieces. I got to eat them all. I mean, it's just the way it is. I'm surprised I'm not, you know, I'm surprised I fit in my clothes. Anyway, long and the short of it is, we also covered this, volume confusing you. On-balance volume, a very important trend momentum indicator. And we went through this the other night, and I just wanted to reaffirm to you that if people have had difficulties, and this is this year, this is not a chart from 1934 or 1992. This is what's happening right now with my world and the way and our style of analysis and trading. And so I think a lot of people say, yeah, I've had difficulty with this volume, and I've got a simple, this little purple line right here that's over the volume histogram. I'd be more than happy to share with you. That's just a 10-day simple moving average. If volume peaks over this 10-day simple moving average, it generally says that there's a change in directional trend. I mean, if the market's below its 10-day moving average, you can see the line, this fuchsia line, is absolutely moving down. Why then is the volume levels moving up with on-balance volume? The advanced decline is rising, and trend is going up. Folks, that was the high close doji against the monthly support back in September and into October's time frame. And we had the same thing happen again in February. You know, the volume went down, but on balance volume rose, and the advanced decline has surged to new highs, and now people are saying it can't go any higher. And unfortunately, people have been saying it can't go any higher for a long time, but yet here is evidence that suggests if you were focused on better tools, I think you would have said, wait a minute, I don't know what you guys are looking at, but if you're looking at these two things, ADCSP and OBV, then you're going to say, yeah, prices might not be able to go up forever, but in the short term or the interim term or the right now, they are going up. And therefore, if they're up, what's the typical seasonal trend of the market? And it's up. So why would I want to be looking at bearish strategies? So even on individual stocks, if you start to scan and say, okay, the overall market's bullish. This is just a simple little company, and you run for scans, high closed doji scans. It's a change in momentum. The market closed above the high of the doji. It's not a 3-candle morning doji star formation. That's why I came up with this and developed that pattern, and that was another one of my discoveries nearly 12 years ago. And a lot of people said, hey, this guy's doing this work with this doji. Maybe we better follow this. And we did a lot of this work in a lot of these expos, and many of you have been to the expos and you've seen my presentations and said, you know what, a lot of this has really been a helpful identification, and that's part of what I think that I really find passion that there are better indicators out there, and I think that the old indicators, the stochastics, they still work. They work best for divergences. The moving average convergence, divergence, Jerry Appel, it's a great indicator for identifying trending market conditions, but not, it's a little delayed in the shifts. And in one of my books, I did a trading system and compared Person's Pivot, the PPS, which is a pivot point moving average system, compared it to the same system with stochastics, the same system with MACD, and MACD was a horrible performing trading system to use crossovers and indicators based on MACD. It made you money, but not relative to the other two. So in any event, when we look at a change in direction, if the overall market, if the overall market's still bullish and you get buy signals in certain sectors and you get changes, I mean, if you're looking at just volume, you may not think that this market could go anywhere. But if you look at a better indicator, a better tool like on balance volume, you're going to see, wow, if you bought a stock at say 33 and you bought an option, an ITM, or if you did a stock replacement strategy rather than tie up $32 or $33 in the stock, if you bought yourself an option, and many of you are options traders in here. How many people, let me ask this, how many people trade options on stocks? All the time. David asked, why do some stocks move up all the time? There's a seasonal tendency. We talked about Sears being one of them the other night. I mean, look at this list. It just keeps going. So I think, you know, whatever whatever you guys are interested, if you think the market's going up and there's momentum behind it, you don't have to do a stock replacement strategy, which is buying an in the money, which is, you know, leveraging a directional trade. You can sell premium if that's what you like, but at least you have an idea that if the market and the overall market's going up and the stocks within that sector are going up and there's a good volume change with it, if you're using the volume histogram bars, it may alter your trade decisions. This is Apple. And, I mean, this is just Apple from the beginning of the month. I mean, it fell right at our quarterly pivot support. And Apple, by the way, we went over this the other night about the seasonality of Apple. So don't be surprised if Apple sees a little bit of a pullback coming into the next week or so, but watch for mid-month strength in Apple moving up again, okay? The XOP, the reason we were looking at this way back when, because the market segment started to show positive performance. And by the way, this thing just, it surged up here even last week. This is a couple days old, but how would you want to trust this volume indicator? It doesn't make sense. So there is a rhyme or reason. eBay. Now, we were here talking about eBay. In fact, I gave this trade out to many, many, many people, to the press, to the folks at the New York Traders Expo. I said, boy, this is a situation, and this is classic. Let me share with you eBay. Look at this on-balance volume indicator right here, folks. I mean, truthfully, that's a pretty powerful, and I'm just going to go over here, and I'm just going to expand this so I can use a different drawing tool and share with you so we can see this a little bit more clearer. So when I point to it, everyone can kind of follow with me a little better. All right, here we go. So this is the on-balance volume indicator. I mean, it's straight up. It broke out of a, from this peak to this peak, and it broke out. And if you notice, when it did break out, when did it break out? It broke out here. So notice that the price is breaking out, the volume's breaking out, but the price is actually lower. So when did we break out on the volume from this peak high, right? So follow me with this real quick. So when the volume on this peak high was made, it's that peak in price. When do we break out of that peak? We break out of that peak about right here. So price is lower, volume is higher. And guess what happens? Well, all of a sudden, this market just zooms up. Look at the daily on-balance volume. Look at the daily histogram volume. This sucks. I got no other word for you. And if I could help the few hundred people in this room today, and we have a large audience, thank you all very much. I mean, I don't know anyone that's starting to tell you about how there's no volume behind this market, but yet here's an indicator that clearly shows a rise. So think of it this way. You did hear of the term volume precedes price. And this is a great indicator, folks. Great indicator. It's powerful. And there's a few nuances that you should probably learn and follow before you just jump head over heels for it. But it does give indications of divergences and convergences. It actually does predict. I mean, if you think about it, look at the old highs. If I've drawn that line correctly, that was the breakout right here at this point. When did the volume break out? Right about here. I'll call it that day. When did it break out of this old high? Okay, so you can see price is sharply lower, but volume is higher. Does everyone see that? At that point in time, this price point here is sharply lower or slightly lower than that price high there. So comparing the Apple, the highest high in the volume, to the time frame the high price was made, right? When the volume broke out, that simple little market observation, when that volume broke out, boy, this was starting to see a potential move. Now, if you ran a seasonal study like we did, and you'd find out, and one of the things that I've been talking about jokingly, nobody in their right mind, and the reason you don't look at buying eBay in the holidays is not many people buy a used gift for their loved one at Christmas. So eBay is not one of those stocks that you look to buy at the Christmas time. It's generally about the last week of January. I know we got a lot of people here that have heard me talk about this. We did a webinar last month about this very same trade. And this was so if you're selling premium, you have a great strategy. If you were doing a stock replacement, buying calls, you had a great trade setup. And I know you did well with this. So this was just another little example of where volume histogram gives no aid in helping to determine a price move. So there are certain indicators that and certain nuances that we can help you guys with. And when I was in New York talking about this, I mean, this actually the slides from New York Expo Conference. So when I was talking about this, I gave this trade out. I said, listen, this stock's getting ready to blast off, and we probably will see the market, at least take out the highs, at least get up to the monthly pivot of 58. And of course, many of you know eBay already exceeded that. The other night we talked about looking at my relative strength analysis to see when do you start to see changes in and to get confirmation that certain sectors are starting to outperform, like the little racehorse on the track. And one of the things is that we mentioned is the KRE, and we just got in the KRE because it started to outperform all the other sectors. In fact, even from a seasonal aspect, we start to see the KRE start to perform. I want you to follow this line right here. Oops. This line right here is pointing to, as you can see, this line right here points to the red line. And that red line, give it a second, we're having a little intermittent delay here with, and I apologize for that, with Omnovia. If you notice, this is the IYT, transportation sector. Notice that the transportation sector, the red line, is above all these other sectors. It's starting to, like a racehorse, start to run. So we're starting to see strength. And that's why we use this sector analysis and this leadership of the group. Now, let's talk about that right now and say, let's look real quickly together at the IYT and say, is it starting to show better performance on a day-to-day basis? And if you'll notice, it has not reached a new high, because the funny thing is, it doesn't even begin to enter a seasonally strong period of time until next week. And that, my friends, is where we want to start to see, and pay attention, because if you get a close over this last swing high right here, if you get a daily close over that high, and if it's combined with an uptick with the on-balance volume indicator, friends, you want to look at either some long positions or start doing a scan in the transportation sector. I want to zoom this up for you because, as you can see clearly, the same type of situation has occurred in the longer term. This is the high in volume, and as you can see, we've just peaked our head a little bit above the time we made that particular high. And as you can see, when we made this high, we are not above this swing high in price for this week currently. Does everyone see that? So the last known high, we are now longer term rallying. Even though we had a little correction in the market, it's starting to grind a little bit higher, not greatly, so it's under the media and most people's radar screen. But what we do see, which is interesting, are these long shadows. Every time the market it's rallied, it's broke, it's come back. It's broke, it's come back. It's broke, it's come back. And it's just stabilized. It hasn't moved. It hasn't moved, I agree. So if I was looking at this, I'd say, wow, why isn't it making new highs? On the other side of the coin, I'd say, why isn't it breaking down? And what's its seasonal tendencies do? And if it's so weak, why is there a lot of upside volume in this stock? Because we just broke out. So with that said, friends, this transportation sector is one that we want to start to field to look for buy signals. Now, one of my scans in TradeStation, and I'm not sure, how many TradeStation users do we have in the room today? Okay, great. Wow. All right, awesome. So with TradeStation, I'm not telling you, my indicators are my indicators, but if you just go over to right over here and go to Insert Analysis Technique, you can just go to the O's and go on balance volume and hit OK, and you're going to have on balance volume on your charts. Okay. One of the things that we like to look for, if you do have a scanning feature, if you've signed up for TradeStation scanning features, what I've created are my indicator, these dots. By the way, you see this blue dot? It's subtle, but the IYT generated a weekly buy signal on strong volume on a light price move. We didn't close above prior highs, but we did generate a strong momentum PPS buy signal. So in the next week or so, if we just sit here and go nowhere and the volume still remains strong, then the seasonal and the relative strength analysis is sharing with us that there's some stealth buying in the transportation sector, and we'll be scanning for stocks for daily buy signals that are in weekly buy mode in the market here. So this is just a buy signal. It's not filtered. In other words, this shows how many stocks on Friday. So if we ran this scan, which I'll run right now because I didn't run it live, but when I go and change over here to my scan page on Genesis, okay, so when we go over here to my scan page, this, by the way, is not this week, not last week. 2 weeks ago, the weekly generated a high close doji, a change in momentum, the close above the high. But look what the seasonal tendency is. You see the seasonal trend? The seasonal trend for the market, it looks like they got a week ahead of us. So sometimes seasonal analysis, it's not perfect. Sometimes it's a week early, sometimes it's a week late. So you look for areas, levels to buy. That's why we look for an entry. You look for time frames, you look for breakouts, you look for other clues to go with that. If you're looking to get long a sector, I just thought I'd point that out to you because, boy, if this is starting to the regional bank, which is the bank, this is not the regional bank, this is the KBE. See KBE, all right? So this is the Spider Bank ETF, KBE. The bank sector, it's starting to move up, and it's not even beginning its seasonally strong period of time. So for options traders out there, look at the seasonal trend. The seasonal trend, the strong time frame, is from about March, coincidentally, till about mid-June. So in that window is a strong average of that ETF, typically in every year on average. So not all years are not created equally, but if you're looking for an overall market that still looks and appears strong, like we've just discussed, and we look for sectors in the market that have a seasonally strong period of time, let's use a third confirming indicator. Is the price pattern showing higher highs? Did we just see a breakout of stronger closes above past or prior highs? And more important, what's the upside target objective? And so therefore, if you can see for an option strategist, you can say, well, gee, maybe if I want to go with this ETF, I can start to scan for bank stocks. When I was just talking about the KBE, which is regional banks stocks, KRE is regional bank stocks, you will notice that even the regional bank stocks have a very similar strong trend. And as you can tell, look at what we have had happen over the last couple days. We saw a breakout. In fact, notice we have a breakout of volume. We've broken out in volume. Notice this. The volume is definitely broken out of the highs. I'm sure everyone can see that. It broke out of my moving average. It broke out of the old high. And as you can see, even this high, the price is about just a little bit under it. And this absolute peak high, we just broke out of that. So price is the volume is preceding price. So we should see, and we're just entering a seasonally strong period of time. So that's why looking at the banking sector, it's not made new highs. And so people would say, but the banks, the financials aren't confirming, and the transportations aren't confirming. Well, the funny thing is, the reason they're not confirming the overall strength of the market is because they haven't even entered their seasonally strong period of time. So it's kind of like a delayed reaction. Can you imagine in the next couple weeks, we start to see the regional bank sector, we start to see the financials start to improve, then everyone's going to say, oh my God, this rally's for real. And by that time, it might be a little too late. So, you know, and I mean too late in the sense that we might just be at that point overbought. So I want to share with you how many stocks, and what we do every Monday is I have a certain filtered scans. I talk about how many stocks gave a high close doji, how many stocks gave a low close doji, because I give daily high close and daily low close dojis, and weekly high close and weekly low close. Those are the big scans that I love to look for. And that's what I created over here on Genesis. It's very kind of an interesting tool. So for short stocks, you know, we can run all types of scans, as you can see these subtitles here. Long stocks on a weekly basis in the S&P 500, by the way, 114 names generated buy signals. So why don't we go through this today, and I'll do this real quick. Out of the S&P 500, you see this green? Many of you aren't familiar with the PPS indicator. If you're a Thinkorswim user, it's been licensed to Thinkorswim. If you're TradeStation, those are that is a lease indicator, and on Genesis, it's the same thing. But that's a very powerful buy signal that we get. So on last week, we had 114 stocks generate new weekly buy signals. So why don't we spend time just real quick to find out of the 114, holy moly, 26 are in the consumer discretionary sector. Abercrombie & Fitch, which interestingly enough, look at the seasonal trend on that. So it now starts to enter a seasonally strong period of time. Volume popped up very nicely. So, I mean, even ANF is starting to get into the mix. Best Buy generated a weekly buy. That's kind of funny. Best Buy doesn't go up as much as everyone thinks. Look at the seasonal trend. So everyone thinks Best Buy goes up. And typically Best Buy's best time is they sell more TVs for the Super Bowl and March Madness than they do at Christmas time. Does anyone know that? By the way, has anyone heard that? Makes sense, doesn't it? People want a big screen TV for March Madness, the basketball finals. I don't know why, but the basketball finals will sell more TVs than Christmas time, by the way. And so Best Buy just formed a weekly high close doji, a weekly buy signal, and it's now entering a seasonally, one of the strongest seasonal time frames of the year, by the way, BTW. So that's kind of interesting. The only thing that's lacking is that there wasn't really enough volume in this move. Okay, but we do see a change in the weekly volume. So if you were a trader, I would say this is a fairly low-risk situation. So pullbacks maybe to near 25.65. I know that perhaps if the market's been in a downturn this whole time and it's had 1, 2, 3, 4, 5, 6 weeks to move lower, maybe you get one small slight downdraft, and we could look for a little pop back up in poor old Best Buy. But the sector itself is starting to enter a seasonally strong period of time. Look at this. This is Big Lots. Notice it formed a high close doji. I want you to understand this is not just any pivot support. It's quarterly support. And even though we have earnings on March 3rd, right, I think any pullback in the market, because it's just been so berated, it's really hard to ignore that seasonal trend in the marketplace here. It did have a little acceleration in volume. CVC, and this is kind of a really cool tool because you can actually see when the earnings are out, if you're going to get into something before earnings, after earnings. We can kind of take a look at this, but what I wanted to go through with you is to say, listen, let's focus in on maybe and find out of 114 names that generated weekly buys, where was the concentrated sector? Well, consumer discretionary was about 20%. 20% of our new 100-plus buys was in the consumer discretionary sector. Interesting, because that's the sector, according to my relative strength analysis, that is starting to outperform, and it's entering a seasonally strong period of time. And while the consumers have not been, while the media has been telling you it's cold and it's frigid and it snowed, that's not the reason why consumers don't spend money in January and February, because seasonally they don't anyway, right? So why does the media not remember this? Because I don't know. I don't know if I just can't answer that question. But only 10 stocks in the consumer staples sector. But Archer Daniels Midland is not really considered in consumer staples as much as it is agriculture. And I'll tell you what, when I take a look at this stock, I go, wow, even though it's kind of risen, against its seasonal tendency, the best time to buy ADM is in October, and this is probably the worst time. I don't want to kind of buy that name. So I want to look for maybe and go through Avon. Yeah, probably if it's door-to-door, who wants to go? But we formed a high-close doji in Avon. It has a seasonal tendency. I didn't know that it's Avon is a consumer staple. I guess women do need makeup, so it is a consumer staple. Women is a necessity. But even looking at Estee Lauder, another, I'm not sure why I don't list this. This is not my company, but those are the sectors they're listed in. Mead Johnson Nutrition, et cetera, et cetera. So these names here are also entering a seasonally strong period of time. But where was the concentration of sectors? It wasn't in energy, and probably the reason is because a lot of the energy stocks have already moved. But when we take a little bit more notice to this, we'll notice that, gee, look at like a Marathon Oil Company. It hasn't participated in the market move yet. But we had a pop in volume, and it's just now starting to enter its seasonally strong period of time. So I think it's important to say what stocks are entering a seasonally strong period of time. And when you look at the overall stock market and you say, gee, they're at all-time highs, there's no value, there's no bargains out there. I'm showing you a list of names that haven't participated in the rally, and the reason they haven't participated in the rally, in other words, from a perspective of where's their highs and where are they now, okay? A big difference. And the funny thing is, they're just starting to enter their seasonally strong period of time. So can you imagine if these stocks all come back to test their highs? And a lot of the names that I'm sharing with you are stocks that have not participated in the rally. And like Rowan and Companies, it had a high close doji 2 weeks ago. It had another one and a buy signal. Look at that seasonal strength. Look at that pop and on-balance volume. Schlumberger, it's breaking out almost to its highs, but it doesn't have a, it might linger until you get into April. So can you imagine, folks, this is a different perspective on stocks that haven't started to move. All right, we've been talking about the banking sector. We talked about looking at the KRE, regional banks. We talked about that in our trading room on Monday, and we took action on it earlier this week. Look at it, of 114 names in the financial sector, and remember, in the XLF, the XLF is not a true financial, it's a diversified financial sector. It has, in fact, insurance companies, it has credit card companies like American Express. It's not a pure bank play. So you look at Chubb, they're an insurance company. You look at American Express, it's a credit card company. So we need, Charles Schwab is a broker-dealer. It's not a true bank play. Legg Mason is a money management company. By the way, it broke out to new highs, and that makes sense. They're probably long stocks. What we want to look at is more banks, and the strongest or best looking stocks is not by chart pattern, it's by volume pattern. So you take a look at a Wells Fargo, which is up near its highs, but it's not breaking out with new high in volume. So I want to say, well, if the bank sector, maybe I got to go through some of these names and do a little bit of digging, but boy, 30 names in this space out of 114 were in the financial sector. That's pretty impressive. So I think there is a way that we can share with you that, boy, what if these names really started to catch up to their yearly highs? What if they started to catch back up and started to rally and maybe make a new high? What if Morgan Stanley, which has a high closed doji and a weekly buy signal, which is in a seasonally strong period of time, as you can see right here, what if it does pop up and starts to see stronger gains? It does look like the upside target's maybe 35, and we've got risk down to 28 or so, but there are some, as you can see, there is testifiable indicators. Healthcare. Well, that's funny because healthcare is not in a seasonally strong period of time. It's actually in a seasonally weak period of time. And Pfizer, while it has been in a weekly buy mode, it's just reaffirming it's in one, it has not had, and this to me is a very, very uneasy chart for me. If I was long Pfizer, I would be probably a candidate for a collar strategy or watching myself if I was long that stock as a pension fund manager, because as prices moved up making newer highs, in fact, we're talking about the breakout of even comparing an apple to an apple. So the day we made the high peak in volume was about right that week right here, as everyone sees this. Notice that we don't have a move associated with that as a rise in volume. Price made a new high close on Thursday, and yet we didn't see confirmation by a new rise in the volume level. Pfizer's almost making a double top, and if we take a look at this, we find out that it actually, Pfizer has a tendency of going down, as you can see, from on or about middle of February to about the end of March. So Pfizer and the healthcare sector might have a little bit of an issue. Not a lot of money went into the industrial sector, at least by new weekly buys, okay, because that sector's already been in buy. I think you guys would look at 3M and go, 3M's at $134, wow. But, you know, Ryder Systems in the industrials, it's trucking, it's transportation. So you got to look at the industrials carefully because there are some transportation stocks, and that's what I would be looking for my scans is transportation stocks. So there are some probable deals in here as we enter in a seasonally strong period of time for the transportation area. So I would want to be looking for and filtering my scans for stocks in the trucking transportation segment of the market. Information technology. Notice that there's not many names there. Looking at materials, there's not many names there. Looking at telecommunication, there's only one name, Sprint. So it doesn't look like, and Sprint, that might be a cheap stock for some of you guys to look at, but it looks like we have seasonal tendency. We had a pop in volume. Sprint might have it has a low risk and a potential medium reward target. But from last week's moves, okay, even looking at utilities, last week's moves, the bulk of buying was that not just on any old buy signal, PPS buy signals came in, again, consumer discretionary, excuse me, go back to our weekly, long weekly, here we go. So out of those 114 names, by the way, friends, consumer discretionary was 26 names. Second place was financials with 30. So the market, the powers that be, were putting money to work, more money to work in the financials, and they were putting more money to work in consumer discretionary. That's important information. One other scan I will share with you, as I promised I would go through and looking at how to dissect the market. How many stocks in the S&P 500 are above their 10-day moving average? And the funny thing is 384. 384 names are above their 10-day moving average. That means we must have 100 and plus below their 10-day moving average. So if they're below their 10-day moving average, then maybe I could run a scan. Of course, Apple's below the 10-day moving average, and say, gee, Apple actually on or about the week ending 3/7, look what Apple does. It goes up, it moves sideways, down a little bit, and then on or about March 7th, it starts to begin. In fact, from on or about March 7th into May 10th is a seasonally strong period of time for Apple. So don't give up on Apple quite yet. And let them talk bad about Apple. You know, what we want to look for is if you take a look at the volume action on Apple on a weekly basis, it's, you know, Apple's off its highs. As you can see, it's off its recent highs from last week, but the volume isn't, is it? So if I was one to be on TV, I wouldn't be talking bad about Apple right now, because if I say it's bad outlook and gets downgraded or whatever, the funny thing is it actually starts to enter a seasonally strong period of time starting on or about the end of next week. Anyway, just thought it was kind of an interesting what I wanted to present to you guys, to say, listen, if you're struggling in your stock picking, if you're struggling in how you look for opportunities in the markets, there are better ways to examine the market. And looking at these tools that we presented are very, very important. When we put together our scans, when we put together our stock page, whether it's looking for stocks that are and just looking at the top names in the utility space, in the semiconductors, y'all should probably create a list that we've done in our platforms, is put the top 10 names of the sectors, and you can find out just on a daily basis whether or not those sectors are moving up or down. Biotech, pharmaceuticals. You know, most people, as we start to get out of the winter and into the spring, that market segment actually starts to lose its seasonally strong period of time. And so if you notice, they weren't buying on Friday a lot of the biotech names, but I know people have been telling me that the biotech sector has been a great value. It's been a great buy. And yes, of course, it has. It's just been incredible. But we start to lose that seasonal strength in that segment. If you notice, that whole segment on Friday was red. And if you notice where we see a lot of the green on Friday, even in the home builder sector, which is the XHB, it's not the Toll Brothers, the Lennars, it's the what we call the peripheral markets, your furniture, your Bed Bath & Beyond. There's another one, man's most hated store. You know, Bed Bath & Beyond is also another name that 2 weeks ago generated that PPS buy signal, and it's now starting to appreciate. And so you say, well, is there any volume associated with it? And you can simply say, as the price has risen on a buy signal over the last 2 weeks, it has had an association of an increase in volume. And so if you look at even last year, look at last year's pricing. When did the market start to bottom out? In February. Who goes and buys something in January at Bed Bath & Beyond? Who goes to buy, I mean, maybe Thanksgiving, Christmas, you buy stuff to get your tablecloth set, but when you look at the home building sector, when you look at new homes that are sold, new homes that are being built right now, and obviously that's evident by looking at the strength in that sector. Let's take a look at Lennar real quick together. You take a look at Lennar breaking out. Take a look at Toll Brothers breaking out. Okay? I mean, if the economy is so bad, why are D.H. Horton? Look at D.H. Horton. It's not broken out to new highs, but it's certainly seen an appreciation. Look at the volume associated with that little rally as well. And then you take a look at, last but not least, PHM. When you take a look at this segment of the market, the volume's broken out as well. You see a nice little tendency of the market to run up. Well, you figure if they're going up, they're going up on valuation, and they're going up because they're making money. Here's another thing. If there's people, if they're making money, they're building homes. If they're building homes, someone's buying a home. If someone's buying a home, a bank's loaning them money. Once the people move into the home, they're going to put bed sheets, they're going to put curtains, they're going to buy curtain rods, and so you have that whole segment about homes. This is a new growth area in the market. I hope you guys are trying to find. So if you're looking for easy answers, I have a way of giving you easy answers, easy stock picks. Sign up for PA Stock Alerts real quick. If you want to learn how to do this stuff yourself, we've got easy answers for you there too. So what we want to do is to say, is there a way that can I easily look to say, I don't need a heat map for this, because heat maps won't tell you what's going to change. Seasonal analysis can tell you what can change. And then looking at the entire sector, because if you just look at, which is kind of funny, because let's take a look at this and prove my point about heat maps. Sometimes the heat map only shares with you the ETF. So you look at the home builders, the XHB, it was negative on the day. But if you take a look at Sherwin-Williams, it was positive on the day. Tempur Sealy, Home Depot, Bed Bath & Beyond, Lennox, Owens Corning was negative slightly, 0.5%. Williams-Sonoma, I mean, they were up 1.7%. That's a big breakout move. That's a weekly high close doji, a weekly buy signal, and the volume was pretty strong. So the point I'm trying to make is sometimes heat maps can fool you, and there is a way to look at these stocks, because funds don't buy every single stock in every sector at the same time. They stagger it out. They buy some on Monday, some on Tuesday. They don't buy all of it at the beginning of the week. They buy some at the end of the week. That way they get the best price of that sector. And rather than the best price, they get the best average price. But clearly we could see more red within the healthcare. Insurers are moving up a little bit. The financials were pretty green on Friday. Regional banks were very green on Friday, by the way, obviously. So energy. This is like a very important way of defining the market for futures traders, or for stock traders. And for futures traders, what I wanted to show you guys is, we talked about this little report. It's called Commitment of Traders. This is the euro currency. This is a weekly chart on the euro. Now, with everything that's going on in Russia, many, many weeks ago, I pointed out, and we did this presentation at the beginning of February, just like I do about once a month. And I said, boy, guys, it's kind of funny, but the euro currency, the small specs are yellow, the hedge funds are blue, and the commercials are red. All right? And the last time we had this kind of combination where the hedge funds and the commercials were neutral to net long, and the only one short was the general public. As you can see, the general public is that yellow histogram. Blue, the hedge funds started to go long. They were long, all in here. Hedge funds and commercials were long, and the small specs were short. Small specs got short right about there. Right when the market bottomed, do you see that yellow right there? Do you see that? Everyone see that? So the small specs started to get short. Hedge funds and commercials were long. I mean, really? Okay. So if 80 to 90% of the small speculators lose money, then I want to pay attention that if I'm long and I see they're long, then I don't want to be on that side of the market. If the banks know what's going to happen with interest rates and the hedge funds have maybe better understandings of, I'm not going to say all hedge funds like Steve Cohen's group, SAC, has inside trader information, but they may pay attention. A hedge fund might have better information on what the bills are going to pass, what central banks are about ready to do. I'm not saying that all hedge funds cheat. I'm just saying they're smarter money than the regular small speculator. And when the small speculator is short the market and the banks and the hedge funds are long, and I have a rise in on-balance volume associated with the move. In fact, I think there was a lady in here, Sharon L., who asked me my opinion the last time we had done this together last month, and I don't know if she's here, and she asked me for my opinion on the euro. I said it's going higher because of the seasonal tendencies, the technicals, as well as the Commitment of Traders report. And now we're at 138.22. And, you know, I don't really see, I think we're going to see a continuation of the market, at least challenge this high, and we'll see what happens as we test that high. When we take a look at a daily chart with the on-balance volume, as you can tell here, where we are in price, we now have a more recent high in price breakout on the euro, but not with volume. So I think the move is starting to expel itself. If I was a small speculator short on the average area here around 136, I'm out $2,500 a contract. Maybe I doubled up. So, you know, $2,500 isn't enough to get me out of the market, but about $4,000 to $5,000 a contract, now I'm starting to panic. So I think there is a shot that we could see a move to take out this swing high, 139. And so we'll take a look at the market up in there. From a tendency of the euros, we do see we do have a tendency for the euro to peak out by mid-March, so that does make sense. Now, if you notice here, you'll see that this is the person's daily pivot, and this is a 2-minute chart of the euro currency. Basically, what the pivots allow me to do, person's pivots, many of you TradeStation users, it gives us the defined range of what the market may do on any given day. All right, so we use them in conjunction, and I'm going to just change this to a 60-minute chart real quick. But as you can see, the daily pivots, you guys will get the daily pivots if you go to TradeStation. You can download that feature for free, the daily pivots on TradeStation's App Store. How it works is it gives you, if the market is supposed to be an inside range, and obviously this was from the 18th into the 19th, we had a conditional change, but it'll list to you what the potential range might be in a given day. And as you see this green line right there, that projects what the potential low of the move might be, and then you look for some type of an indicator like a person's PPS buy-sell indicator. But as you can see, it not only gives you the predicted range concept, it tells you what the potential high and low of the market might be. So when the market gets down to the low, you just don't catch a falling knife. You wait for the market to change. Now, this is kind of an interesting idea because I just talked about this early in today's presentation about specifically momentum changes. And if the market is near a green support line and we start to see the market as it moves lower at support and it closes above past or prior highs, we start to get a change in the market. So now one can start to, instead of buying on the way down, buy as the trend has changed based on identification of that one simple little observation. The market, the last conditional change, this close is above that high and it's above that high. This candle closed below that low. So once the market closed above that high, this high right there, which was that candle, that caused a change in the market, and we saw a trend move off of that predicted green bars low. So you do get great training on this on our website, so you can download that information, and there's a whole lot of other stuff that you can get. That's the power behind the person's pivots. So far, I know that we talked about seasonal analysis, on-balance volume, pivot analysis. We've already gone through the seasonal analysis, what sectors and stocks you guys could look for. That is one of the things that I think is in today's session, I think you guys have noticed. I scan for stocks that are in seasonally strong sectors. If we have the daily and the weekly are in a buy mode, and the buy mode is based on my proprietary indicators, the PPS indicator, and that's when I place my bids and stops on orders. And, you know, I don't get filled on everything either. I want the market to pull back to me. I don't chase markets. Sometimes I get it, sometimes I don't. But, boy, when you run these scans and you are an option trader, you might be able to get a little bit more oomph out of the market. So it's important to look for pullbacks to my the daily or weekly support targets, and that's why we have those moving averages there. Those are the support targets with moving averages. And also, we like to keep our ears tuned to fundamental events. I don't like to trade in front of Janet Yellen. She can change the world on us, especially as a day trader. Because I may get stopped out of my position because of jerky volatility. So it's important to understand what fundamental event and circumstances, like an FOMC meeting, like a crude oil inventory report is coming out. Those are very important. I use different time frame combinations, and that's the structure of my trade entries. I shared that with you for position and swing trading, looking at daily positions against weekly positions. We use that moving average component to identify trend and for order entry. And of course, we do use candlesticks to identify a gain or a loss of momentum in the marketplace. So these are some of the things that we like. We like this confirmation. This is a very important bullet point. I like confirmation that the shorter term is in sync with the higher term time frame. You guys saw this scan that we put together here, the Person's Pivot Scanner. Notice that I looked for daily buy signals when the weekly's in buy mode. Does that not tell you that I am looking for, if the daily's in a buy, then I want to make sure I get a daily buy. How many stocks are in a daily buy with the weekly in a buy mode? Okay? And as we just did that, 39 names popped up. I just ran that scan while we were doing something. So 39 names popped up, by the way. Yum Brands was one of them. Yum Brands, I mean, it's probably not sexy, but I'll tell you what, the on-balance volume's moving. It's a stock that I think that, you know, had a bad rap with the Chinese Kentucky Fried Chicken, but I'll tell you what, this is a stock that has been kind of channeling, and one of the things that I'd say is it's moving up, but not with an association of that volume. So I'd say, well, maybe I could get better money working, and that's just what I'm looking for. I'm trying to scan for the best stocks possible. Now, this is Goldman Sachs, and Goldman Sachs, they are definitely in the financial arena. They just generated a weekly buy signal. The volume did surge up, as you can see. The daily generated a buy signal, and it's in a sector. Goldman Sachs is not a bank, but they definitely are an investment company, that they are generating a new surge of growth. I don't know about this volume trend here telling you a whole lot. In the last couple of days, volume's gone up, but the last couple of days it's been choppy. But the on-balance volume has shared some good stuff. So the daily generated a buy signal on Friday, and we also generated a weekly buy signal. So this might have, it just, as you can see, supported. It's been supporting against the quarterly Person's Pivot support as it enters a seasonally strong period of time. So pullbacks here, if we do get pullbacks in the market down in here, I would say you have a low risk and a potential high reward, because this is in a segment of the market that starts to enter a seasonally strong period of time. And that's how we start to look for stock picks. The segment, when I define in this slide here, I like confirmation that the shorter term is in sync with the higher time frames. Does everyone understand that? Right? So when I started this off Thursday, I said every different market has a set of different indicators that are unique to those markets. Remember, I said that. They're unique to each market. The advanced decline comparative ratio is unique to each respective stock index. For example, you can run an advanced decline on the S&P, on the Qs, on the diamonds, on the New York Stock Exchange Composite Index. You can run it on the NASDAQ Composite Index, and you can run it on the Russell. And by the way, one thing I wanted to point out to you is if you take a look at this NASDAQ Composite, the NASDAQ Composite at 4,308 is still below its all-time high, as you all know that. But the NASDAQ Composite Index, it made a new high, and the on-balance volume kind of failed here, right? And look at the advanced decline. So I would like to share with you, I think this is one of the things that are kind of important. It's very important, because when I'm making a determination, look at the fact that we had a substantial higher high in price. That's pretty substantial. And we did not meet a new higher high in the advanced decline line, did we? Does everyone see that? And you'd say, well, that's bearish. And I'd tell you, well, interesting. I think the reason is if we understand what's comprised of that, what's in that sector, right? So when you say to me, well, what is in that sector? And I'm going to tell you, isn't the NASDAQ, doesn't it, NASDAQ Composite Index, have, besides technology, doesn't it have a lot of this stuff right here? Biotech in it? biotech, NASDAQ, isn't that all contained in that NASDAQ? And this whole sector was down a little bit sharply. So perhaps we're starting to see a little rotation out of certain segments of the market that may cause that that reading to show weakness, thus supporting our conviction that we are seeing a correction in the market. It's just overpriced stocks and sectors like biotech that have had an amazing run. People might be taking money off the market, off the table there, and putting to work in sectors that haven't performed, such as some of those consumer discretionary stocks. And as you can see, there's life building into it. Yes, while they have gone down, they've gone down like Bed Bath & Beyond. They've gone down when they should go down, and they're now starting to enter seasonally strong period of time. I don't know if that makes logical sense to you, but it sure has been working for me. And I could say, even if you're a day trader and trading S&Ps, you know, when the 15 minutes in a buy mode, I like to look for the shorter term time frame buy signals. And so if I'm in a 15-minute buy with a 3-minute, I don't care. You can use the exact same techniques from a day trading perspective as I've been sharing with you with stocks. So I don't care what walk of life you are. And the guy who said sayonara here, I'm sorry, you know, you can't please all people. And I understand that. But I think that if you guys are, and I want to say thank you all for spending time with me this morning, because I know that you have a lot of things going on and we've got to wrap this up real quick. But I think it's very unique way of putting trades together. I think this is how we try to look for high probability trades here. And whether it's short term in nature, swing trade in nature, it's something that's been working. I want to give you guys a chance to, if you're interested, and we put together an incredible special offer. For March, we're offering my special options trading simplified course. Many of you may have already purchased this before, but we're combining that with our PA Stock newsletter for a quarter, one free quarter for the rest of this month and for the remainder of the next second quarter. So you actually get 4 months. And that will get you all our trade alerts for PA Stock alerts. Again, 2013, we were up 100.6%. And so far, year to date, this year, in our stock picking, not options, stock picking, just stocks, we're over 31% year to date. So with that said, if you're interested in this offer, if those of you who want to take us up on this and take a trial for the next 4 months, starting for March, April, May, June, it'll cost you $200. You'll also get my special options trading simplified course. It's online. You'll have access to that, but we'll also give you 1 week in our live trading room for those who purchase today. Click on that link and you can go right to the special offer. It's an amazing price. It really will get, I think everyone here will get a lot of value out of this course. So this is something that I'm very proud of the work that we've done and where I've created these indicators, whether you're using TradeStation, Thinkorswim, Genesis, all these indicators are available. TradeStation users, you can get the daily pivots for free. You can get a trial on the trading app store. In fact, my person's pivots is, I think, one of the top popular indicators on TradeStation trading app world from what they've told me. And I think if you go to our website, which I'd love to share with you right now real quick, if you click on that link, you're going to come to our offer. This is both closed and open positions as of the end of the month. And that's where we're at for stocks. If you want to learn about how to apply certain option strategies instead of take these, what we do for PA Stock Alerts is that we do 3 nightly videos, Tuesdays, Thursdays, and Sunday. Tuesday, Thursday, Sunday, either Tom does them or I do them. We flip it equally. We send out email alerts of what we're projecting, what our stock is, what our entry level is, and what our stop loss is, so that you know what the entry is, and you have plenty of time to get in that. We send email alerts out We also set profit objective orders out so that you have plenty of time to act on them, especially if you work or you don't have access to your emails every second of the day. Therefore, many of you will have an opportunity to get better pricing. If you're a little bit more astute, sharper than the average trader, and you understand options and maybe apply options, directional trades, such as a stock replacement strategy, many of our subscribers have enjoyed significant profits using options and optionable strategies on these. So with that said, I encourage you for this particular offer is an amazing price at $199, and this is very serious information. And we go through exactly what I've kind of been talking about today. This is the strong sector, here's the market conditions, and perhaps you can use our training videos Tuesday, Thursday, Sundays, 3 days a week, except for holidays, to find out about the markets and our overall view of, and get a better educational view of our market timing techniques, along with our actual stock picks with our entries and our risk factor. Many of you, if you're interested in finding out about our software and indicators for TradeStation users, if you go over here to TradeStation, you can find there are right here scanning alerts. Click on this. You will find, if you click here where it says click here for free, you will find Person's Pivot Triggers. You can get a free trial to the buy and sell indicators, or you can simply download the free daily Person's Pivots right there. In fact, when you go over to Person's Planet and you go through here, we have plenty of information, and you can go down here and find all types of information, and as well as training on our triggers. So we have all kinds of different information on this website. If you want more information about pivots, we have a pivot calculator on here, and there's all kinds of great information on our home page. So with that said, if you guys, thank you for your time. I hope I did give for those that were brand new that have never heard of me before, and you know, I know that you get a lot of information in the world and you don't know who's who. You know, I wanted to say thank you all for spending time with us here. If you're interested, take advantage of that special, incredible, it really is a great offer. I'm very proud of working with Tom Asprey. And number one, if you want actual stock picks that say, here, we did all the heavy lifting for you, here you go. And if you don't understand options, grab that course. It just takes time to do it. We do not, at PA Stock Alert, someone just asked me, we do not put out options strategies for you. We only pick out the stock, the entry on the stock, and the risk and our stop loss, okay? It's a suggested entry level. Now, there are many times we have missed an entry. I'm not going to joke with you. There are many times we've missed an entry by pennies, and so we've missed other trading opportunities. These are the actual trades that were executed, filled, that were traded. Last year, same thing. This is not, you know, after the fact information. These are trades that were put on. These are trades that recommended out by Tom Asprey and myself, John Person. So it is a very serious newsletter, and I think for the next 4 months, if, you know, I don't want to spoil anyone, but we've gotten together since 2010, June of 2010. We've beat the market every single year. Last year, we just had our finger on the pulse. We were in the right stocks, the right sectors, and picking stocks last year was not that hard. Not every stock made money. Don't get me wrong. And some did better than others. We don't like to take a stock risk in front of earnings. We generally try to get out of them. But overall, if you're interested in this, sign up today, and you'll have access to a week in our live training room where we do a lot of work every single day and project out what, just to give you an idea of the kind of work that we do. I do these worksheets every single day for our members. Every single day we put out a Word document. In fact, this is a Word document for Monday, all right? I start off with a daily positive thought. And I think the guy who is credited the most with positive thinking is Napoleon Hill. So I thought we'd start the week off with a line from Napoleon Hill. Next, we give out what the events are for the day, what earnings are out before, what earnings are out afterwards, week to date sector performance. We review, by the way, last week, the week before, the worst performing sector was the KRE. This week, the best performing sector. In fact, we go through here, and what does this line say here? Watch regional bank sector, and we were looking for these particular names for long trades. So we put out recommendations for stocks. We put out Ross was one that we were filled on. Cliffs we took a loss on. Ross beat the loss on Cliffs, so we're net gain. These are all of the types of things that we do. One of the seasonal trades that we had was besides Shield, we also had eBay, but this is the week of the daily sheet that we go through. So we also talk about commodities. If the ES breaks, it's still bullish, but it breaks under that. The bonds, bean oil, live cattle, which we had a great trade in this week, copper, crude oil. So it's not just stocks, it's also commodities, and that's what the work that we do in our trading room each and every day. I want to say thank you all very much for attending. If you're interested in taking us up on this offer, for those, again, who take advantage of this special offer, you get 4 months of Person's Planet PA Stock Alert newsletter. That gives you access to the video reports every Tuesday, Thursday, Sundays. Our email alerts, you'll get our whether we're entering a stock, exiting a stock. You'll get our market updates. You'll get our market video report reviews, again, Tuesday, Thursdays, and Sundays. You'll also get a copy and be able to review the Options Trading Simplified Trading course, which was very, very good, by the way, for those who don't understand options. And for those who do understand options, I think you'll have I think I went through a really great section on why it's important to revisit implied volatility, of course, looking at specific strategies in there. When you do specific strategies, whether it's spreads, credit spreads, whether we're looking at also stock replacement strategies, what the timing, what the delta formula is, what your time horizon is. Many of you already know this. The shorter the duration, the higher the delta. The longer duration, the lower the delta for a stock replacement strategy. And that's why I think this is such a great combination offer for everybody, because if you're trying to get back on your feet and you want to know where should you be invested in the market, at least this will be, you can devote a little bit of money towards this, and maybe it'll enhance, at the very least, we have a pretty long-standing track record. So I want to say thank you all very much. I hope you got a lot out of the last 2 days, and we'd love to see you take advantage of this for $199. It really doesn't get much better than that. More importantly, I think everyone will have a great educational mindset with just the options trading course in it itself. And to spend a week with us in our trading room, we do have this thing every Monday called Planning and Scanning. Planning and Scanning is where we look for kind of like what we did today. What stocks are strong? What sectors are strong? What's the best looking stocks in those sectors? What are the commodity outlooks? What are we looking for? What's points of resistance support to do business at? And that's Monday. We record that, so if you can't join us in our trading room every day, you can at least see the recording of the Planning and Scanning. I want to wish everyone a great afternoon. It's from sunny Florida here. It's just an outstanding day. Watch the Honda Classic. When you see the 17th hole, look for Miss Mary, my wife, who's there, and she'll be the one telling the audience to shush while watching the golfers play. So thank you all very much. You guys have a great weekend, and we'll see you when our paths cross the next time. Thank you all. Okay, so there was a question here with Jack who said, Do we think we'll get more stock alerts before sell-in may go away? And by the way, last year we were not, Jack, very good question, we are not adverse to trading ETFs like TZA, SDS, SH, for example. We do inverted ETFs. We just haven't had the opportunity to take any of those this year because we've been more impressed with individual stocks, okay? Thank you very much, Candace. I appreciate that. As long I got to get my shoulder done. It really, my back's getting better because my shoulder hurts more now. So that's how I know. Thank you, Jim Hagman. Good to see you, sir. And we really do think that even last year, the particular stocks and our trades that we did is posted on our website as well, which shows the 100% return where we were in, what stocks we were in. We actually last summer, many of you that have already been members with us know that we bought TZA. You know, we are not adverse to, when we see a market correction, to go with the leveraged ETF. We just don't do options on our advisory service because it's tough for to price an option strategy when a price of a stock hits a certain price level. But active traders, those who are in the market, they see the stock. You know, if we say to buy a stock at 23, 10, 20, let's say $30.33, and the stock's at 30.35. Well, they may not wait to buy it at 33. They may buy it at 35, or they may buy and take a stock replacement option strategy if it's near that level. So, you know, for everyone to be fair, how we do that is we set our price limit orders the night before, and we put that out both in the email and we discuss it on the videos. So yes, just thought I'd let you know that, Jack. And in the trading room, we definitely trade options and option strategies. I mean, we've done so far this year everything from, even had a great OOPS setup. Most people don't remember my friend Larry Williams' OOPS pattern, which is pretty much a bullish piercing pattern. We've done OOPS signals. We've done credit put spreads. We've done credit call spreads. We've done stock replacements. We've done all types of different option strategies on different moves, as well as day trade the market. We've been in stock replacement strategies, eBay calls. We're long, we're pretty much been liquidating our inventory, both Sears and eBay. We did Ross stores. I mean, we've had a pretty good 2 months. So with that said, both in the trading room and PA Stock Alert. So for $199 for the next 4 months, it'll be a great ongoing education along with the Options Simplified Trading course. That is a powerful, powerful trading options course. So I thank you all very much. Take advantage of that offer. And for those that do purchase it, I look forward to seeing you spend a week with us one-on-one with our live trading next week. Everyone have a great, or if you would like to postpone that for the week after, we can do that for the week after. We're very accommodative. I prefer to have people maybe study up first and then join us. Either way, it's up to you guys. All right? Thank you all very much, and we look forward to having you join our community of traders.